Welcome to The Explainer. Today, we're going to spin our way through the details of a new IPO, Shree Ram Twistex. They're a pretty key player in the textile yarn space, and we're here to break it all down for you. You know, the source material for this kicks off with this fantastic metaphor, and honestly, it really hits the nail on the head. It perfectly captures how this industry works, right? Sometimes the profits are just pouring in, and other times, well, you're just trying to stay dry. So that's the big question, isn't it? Is this IPO a golden opportunity, or is it a risky flood for your portfolio? We're going to figure that out together. We'll dig into the hard facts, take a peek under the hood at the company's internal workings, look at what's happening in the market, and then at the end, we'll put it all together for a final verdict.
Okay, first things first, let's get right into the nuts and bolts, the IPO snapshot.
So, here are the key numbers you need to know. The company's looking to raise a little over 110 crore rupees. But the most important detail on this slide, it's a 100% fresh issue. Now, why does that matter so much? It means every single rupee is going right back into the business to help it grow. Nobody's just cashing out their shares. And for investors, that's a really good sign.
And hey, if you're thinking about jumping in, you've got to pay attention to this timeline. The window to subscribe is pretty tight, just a few days at the end of February. And then the listing is slated for early March. So yeah, you'll want to mark those calendars for sure.
Okay, so what does this company actually do? This is super important. They don't make the jeans or the t-shirts you buy in a store. Nope, they're a B2B business. Think of them as the ones who make the foundational material, the cotton yarn, that other companies then turn into denim, shirts, or even your bed sheets. They're a really critical piece way at the beginning of that whole supply chain. All right, let's talk money. When you look at their financials, you see a pretty nice trend line, right? Revenue is climbing, which is great. But look at this. Their profit after tax, the PAT, is growing even faster. And that tells a really interesting story. It means they're not just making more sales, they're actually getting better at turning those sales into real profit. They're becoming more efficient. And that's exactly what you want to see. Okay, so the numbers look pretty good. But what's really going on inside the company itself? Let's do a little internal analysis, weigh out the strengths against the weaknesses. So, on the plus side, there's a lot to like here. First, their whole manufacturing process is integrated, which basically means they have a ton of control over quality and costs. That's a huge advantage. They also have a wide variety of yarns, so they're not putting all their eggs in one basket. And remember that fresh issue we talked about? A big chunk of that money is going into a renewable energy plan, which is a really smart move for saving money in the long run. But, of course, it's not all smooth sailing. We got to talk about the weaknesses. At the end of the day, they're in a commodity business. That means they don't really set the prices. The market does. And that keeps their profit margins, well, kind of moderate. Then there's the risk factor. All their manufacturing is in one single location, and they rely on just a few big customers. You can see the problem, right? If something happens to that factory, or if just one of those big clients decides to leave, ouch, that could really, really hurt. All right, we've looked inside the company. Now let's zoom out and look at the external picture. What are the big market trends, the tailwinds that could push them forward? And what are the storms brewing out there that could cause problems? Now, this is something I find really interesting, what they plan to do with the IPO money. Look at this. A huge piece of the pie is going toward building their own renewable power plant. I mean, think about it. Energy is a massive, unpredictable cost in this business. So by creating their own green power, they're basically future-proofing themselves against rising energy prices. It's a strategic play to lock in lower costs and boost their margins for years to come. That is just smart. And speaking of opportunities, there's some big ones out there. We could see a boom in textile exports. And then there's this massive global shift happening called China Plus One. Basically, big international brands are getting nervous about having all their manufacturing in China, so they're actively looking for other countries, like India, to work with. And a company like Shree Ram Twistex, they are sitting in a prime position to catch that wave. But on the flip side, the threats are very real. Number one, cotton prices. Their main raw material can go on a roller coaster ride, and that directly impacts their bottom line. Then you've got the threat of a global slowdown. If people stop buying clothes, demand for yarn just dries up. And let's not forget, this is a hyper-competitive industry. A lot of these things are completely out of the company's control. Okay, so we've looked at the company, we've checked out their report card, we've scanned the horizon for opportunities and threats. Let's pull it all together and get to the final verdict. What's the score? All right, after crunching all the numbers and weighing the pros and cons from our source analysis, the final score for the Shree Ram Twistex IPO is a 6 out of 10. So how do we get to a 6? Well, let's look at the scorecard. The business model and the financial growth, they're pretty solid, landing in the 6 to 6.5 range. But look here, the valuation gets a 5.5. It's not exactly a bargain. And the chance of a huge payday on day one, that's rated just a 5 out of 10. So what this really paints is a picture of a solid, steady company, but maybe not a showstopper. So what does a 6 out of 10 actually mean for you? Well, it's not a crazy risky bet, but it's probably not going to be a blockbuster that doubles your money overnight either. Think of it as a reasonable choice if, and this is a big if, you specifically want to invest in the textile industry and you're mentally prepared for the ups and downs that come with it. This brings us to the most important question. Is this IPO for you? And the analysis is pretty clear. If you're a patient, long-term investor, someone who gets that this industry has its cycles and you're willing to hold on for a few years, then yeah, this could be a good fit. But if you're a trader looking to make a quick buck on listing day, the numbers suggest you should probably look elsewhere. And that really leaves us with one final thought. Is this company a disciplined, steady spinner, or is it a fireworks factory? The choice really boils down to what kind of engine you want to add to your portfolio. Are you looking for something built for the long haul, for steady performance? Or are you looking for that quick, explosive burst? That's the question you have to answer.